All right, team, welcome back to After Hours. We're going to provide a banger show for you today. We are going to provide you two ways to win in crypto via lending and staking. We've talked in depth, Maddie, about staking, whether it's your Casper or other cryptos, other altcoins out there in their native staking pools. So we'll get into that later, but we want to start with lending. So, where can we lend out our crypto? Well, there's not many options out there, but we did see some pretty fantastical within the last month. I think Dan covered this on one of the shows on the website very briefly. But you are now able to take out loans against your Bitcoin on Coinbase. So we're going to get into that today. We're also going to discuss ways to earn yield on your cryptos. Very exciting. So we have talked about this in the past, but we're going to kind of condense it in two ways you can make money on your crypto. And then maybe at the end, if we have time, Matt, we can maybe get to the charts and point out some cryptos that are on the table right now to stake and earn yield. Obviously, team, this is like, I shouldn't even have to say this, but I'm going to say this anyways, just in case people are new here. We do not buy cryptos just because they have a high APY. We do not buy cryptos just because they can be staked. That is silly. And so we're going to get into all this mess, all this great things of earning money and earning a passive income on our money, Maddie, because this morning I was hearing someone talk about how investors are getting ahead and people that are saving are falling behind. And I see this to be true in many circumstances with people around me. The people that invest their money that are thinking long term, that have a low time preference, are going to win out in the end to people that have a high time preference, that want to spend their money, and maybe they do a little bit of saving, but then that's gone the next month because they have a bill to pay. These things go quick and in and out of your bank account, and it's important that we set that aside for it to grow year over year, and ultimately if we are investing crypto in these big bullish periods. So I'm excited to get into that. Matt, let's discuss before we get into that crypto charge. What is crypto charge all about?
Yeah, crypto charge, guys, is again part of my voice. I'm on the bend here, but crypto charge is it's my baby. We've been working on crypto charge for almost 4 years now. We've all really worked very hard to really craft the program it is today. Me, Gav, Dan, even our community, right? Like we've worked very hard to listen to you guys, make this a very cohesive and community oriented experience. So we're really focused on education. We come to you guys Monday through Friday with live updates. Tuesdays are going to be generally our macro updates from our resident expert Dan Habib, who will give you guys some of the best knowledge you're going to get when it comes to inflation, interest rates, the macro environment. Just talking to your friends and family, you're going to sound wicked smart, just understanding on a very digestible basis what's going on in the economy. Obviously, we took a very good look at the charts every single day. We have our coin library as well, where you guys can go in there and kind of see some of our potential entries, our multi-step exit plans. And then of course, within the technical analysis, we give you guys a lot of little notes in there explaining what's actually happening on the chart. We don't expect you guys just to look at the chart, look at the numbers and have that. And of course, lots of quick start resources in our Discord community where you guys can ask questions, get updates, and that all comes at $49 a month if you use code YouTube, or $4.99 for the year. So usually it's either going to be $100 a month or $1,000 for the year. With code YouTube, guys, we want to make sure you guys are getting an affordable price, $49 a month or $4.99 for the year. So if you guys use code YouTube, you get 30 days free plus those prices. Love for you guys to come check it out.
I love that, Maddie. Team, let's get into the content today. And if you are paying close attention to our social accounts like our X account, there was potentially, Matt, a guest for today's show. And there was some mix-up with that guest, and they were not able to attend for whatever reason. We're not going to get into it. So it was in response. We're going to probably be talking a lot about lending. And so I was doing some Googles, getting into some research on how we can make money. Of course, we have our staking opportunities, but I also wanted to delve into lending. And this referred me back to a month ago where Coinbase announced its partnership with Morphos, a open source DeFi platform, to offer Bitcoin-backed loans. And now this is very impressive because I didn't think it was going to come around this quickly. Obviously, we can't do this with other cryptos, Matt, like we could with the Nexo back in the day, or we could just top up and start earning a yield on our crypto. But this is a way for your regular person to not have to deal with all the hiccups or all of the stress in going into the DeFi world of crypto, where you have to connect your wallet and go into these pools. And that might be a hassle for some people, where now you can directly just go into your Coinbase account with their feature. This is only available for 10% of US-based accounts in America. So it's slowly being rolled out, just like it was for futures trading on Coinbase. So it's slowly being rolled out. where you can borrow against your Bitcoin. So Matt, I want to do a little historical, go back into 2022 where we had these things like Celsius, BlockFi, and Nexo, where we are able to earn yield via these centralized platforms. Can you tell us what it was like in 2022 where we could just top up and earn yield on our crypto?
So, first of all, I think there was a lot of just confusion at the time because a lot of these platforms were just referring to all of it just as a blanket statement as staking. And maybe some people were a little bit educated, maybe some people weren't, probably more people than not, that really didn't understand the difference and didn't understand that massive APY was not baked into the protocol, right? It's not part of the consensus mechanism, but in fact was lending, which is not a bad thing, right? I don't think that lending is a bad thing. We just need to be very aware of when we are lending, and users need to basically, I would say, sign a truth in lending agreement, understanding that they are essentially, borrowing or lending, and the risk associated with that, so that they're not confused. So obviously, we had a few options out there. You guys are probably familiar with most of them, like you said, BlockFi, Voyager, Celsius, and Nexo. Those are kind of, I guess, the big four that were out there that were paying decent yield and making it relatively easy for you to do so. Now, our preferred, at least my preferred platform, was Nexo the entire time. That also comes down, not that I foresaw the future by any means, just from doing just some simple research, looking at the attestation reports, had the biggest backing of total amount of collateral in their account versus like how much insurance they had to pay out. It was very asymmetrical, so I felt very safe in that alone. So that was the main reason I went into Nexo, not because I had all of this like premonition that anything else was going to happen elsewhere, but they were paying somewhere between 8, 15, 20, 25, sometimes even over 30% on certain tokens, or brand new tokens where they were trying to get new customers in, paying a really, really crazy stablecoin APY. And it wasn't sustainable, right? At a certain point, we all had to look at the numbers and go, all right, well, like one or two things is happening, right? Like either everyone really, really wants these assets and they're borrowing them at 38%, 40%, 50% for it to make sense for them to lend out plus the risk, or this is not realistic, and this is going to be a system that eventually is going to crumble on itself. So unfortunately, that's what ended up happening. And of course, the catalyst came from FTX and other things that created that big collapse, and it created this deleveraging event, just like we saw with that carry yen trade. You guys remember in the summer last year where you had a lot of hidden leverage in the system, right? And one little catalyst kind of unwinds a bunch of other trades. It's kind of what ended up happening with that entire fiasco. So Nexo was pretty much the last boy standing. They closed their doors, as they saw what was kind of happening with the rest of them. We're like, for US customers, like, hey, we're exclusively going to work in regions where we know that we have clarity to do this. When we do have clarity here in the US, we'd be happy to return with 2.0, but we're done with US customers for now. And that was kind of like the big exit of staking or lending, I would say, here in the US. And we haven't really seen it come back yet until, like you just mentioned, with Coinbase kind of rolling this back out. And I think it also just shows a lot of confidence in where we are in the Coinbase case right now. And of course, with the recent dismissal next week or this week, I was supposed to be getting a confirmation of dismissal from the SEC, that they feel pretty confident that they're not breaking any securities laws by doing this. So I think it's a very good early sign, but we'll see what kind of that process looks like as we follow through.
Absolutely, Maddie. So, team, the feature is supposed to be seamless in Coinbase for your regular person to be able to take out Bitcoin-backed loans. They'll have an interface with analytics, with repaying back your loan and so forth. But what is essentially happening is you're taking your Bitcoin, it's being wrapped in CBBTC on the base network. That CBBTC is being sent over to Morpho, and from Morpho, you're being sent in your account on Coinbase USDC. And now these are now we got to get into, Maddie, the risk with that, okay? Because people want to be able to borrow against the money they have against their crypto like Bitcoin and not have to sell it. But then they'll end up taking egregious loans. And I know people in the past, all right? I know people in the past that took loans when we had access to Nexo, that took loans out and lost a lot of money, because when the market dipped, you got to be able to put more money on the line, more collateral. If you can't, it's going to be sold immediately. It's going to automatically be sold, and there's no ifs, ands, or buts about it. So when it comes to Coinbase, they have an LTV ratio allowing of 86%. You can borrow up to 86% of the Bitcoin that is collateral. I wouldn't recommend to do that at all, Matt, honestly. If you are putting up $100 of Bitcoin and you're going to borrow against that in a loan, maybe like 30, $40 USDC sounds reasonable. But anything more than that, when you see these sharp declines in the Bitcoin market, Maddie, it's going to be treacherous. You're going to lose money. That collateral is going to be gone. So what are some maybe risks with this?
Definitely not a risk-free trade by any
Right.
means, or you know, and that's one of the things that we've probably talked about on the channel. We definitely need to kind of maybe readdress here, like we've talked about with XRP in the future, when those lending options do become available. And I say lending, not staking, very intentionally.
Right.
When those lending options do become available, we still have to be very careful about what kind of size of loan we're taking out when we are, you know, especially if we're like, hey, we bought these at great prices. I want to just keep these long term. I want to borrow a little bit of money to, you know, invest in other cash flow things, or, you know, invest in other stuff, right? Like the goal should still be to take that money and put it in other things that are moving things forward for you, not right, like not buying luxury toys or other things that are bad debt that you're now accruing. Because then if you think about it, you're kind of like compounding that debt you owe and whatever else. Beside the point, loan to value, LTV, is going to be one of the most important things that you guys have to look at. And a lot of people will look at kind of the market and they're like, well, I don't think it's going to go below this price, right? Like it doesn't look, you know, that realistic, but you kind of have to use a little bit of chart work to see
Right.
where key support levels lie, right? Because if you're like, okay, well, if price were to move from here to here, I would be at underneath this loan to value ratio and I have to deposit whatever, this amount of money in order to bring me up to break even. Otherwise, they're going to start liquidating my Bitcoin. By the way, guys, margin calls are not like, hey, they sent you a text and they give you guys a week to top it up. That's not how it works. Like you need to come current, like pretty much immediately, or they will start chipping away at your total balance in order to, like, you know, pay back that loan. So, and when we've seen flash crashes and liquidation candles, like we just saw the huge flush out, and then of course the market's reacting the way they're acting now with the Bybit hack. You know, you just can't predict a lot of these things. So when you guys do take out that loan, if you decide to take out that loan, one, look at the interest rate and make sure that it's worth borrowing that money, right? Because maybe it's worth just going to getting a personal loan and not having, you know, all kinds of crazy stuff, you know, your Bitcoin at 9 or 10% when you get a personal loan at 12%, and then not have to worry about any liquidations, just making sure that you make your monthly payments, right? So make sure that you're looking at the reasoning behind the money, and being very particular about it. You always want to go with a very, very small amount compared to the total amount that of collateral you're putting up, so that you're not putting it actually at risk and you're truly taking a loan that you know that you're going to be able to shore up quickly, if you want to make sure that you hold on to that Bitcoin. So there's definitely risk with that. I would say it's no different than when we talk about the leverage markets or the leverage environment, right? Like a lot of us times we've talked about using 100x or 50x, and you can use those things responsibly. It's the relationship between your entry and your stop loss, though, that should determine your position size, not I want to open up this much and I'm going to use this much leverage in order to get there, but your stop loss is, you know, only gives you 0.001% in price movement, and then the entire position's gone, right? So it kind of doesn't really matter if you can't weather even just a very tiny market move. Same exact concept applies when it comes to lending. That LTV is absolutely crucial. You know, so, and that's basically the margin ratio in leverage trading. So, you know, especially with a product you don't fully understand, talk to somebody who does. It's not risk-free. It's not free money, and market volatility can take away your collateral, and it could be a big bummer.
Absolutely, team. And I will leave down in the comment section 2 links. I was quoting a lot from the representative at Coinbase. It was actually an interview that was released this morning. And so I was like, oh, this is a perfect time to talk about it. He's giving all the information out now. So I'll leave that link down below. And there was also a video I got to hear of a guy at Morpho, because Morpho has been around for a couple of years, the lending platform, and hearing a representative from them talking about what this partnership means. So I'll leave those 2 videos linked down below. We just kind of gave you like a crash course on this right now, just making you aware of this as it relates to lending. We talk a lot about staking, but not a whole lot about lending, because there are a lot of risks there. And if you are just new here, is my voice sounding terrible right now, Matt? I sound super sick right now. But
I mean, I'm sure there's some ladies out there that maybe like your, you know, a little bit of a drop in the octave, but you know, I'd say you sound better than you did a week and a half ago.
Jeez, my nose. So anyways, team, I just think this is very important. I will leave those 2 videos down below, and I thought they were pretty informative. Next part of this show I want to get into, Matt, is staking. With a lot of our cryptos, we are able to stake them to earn an APY. And I think a lot of people discount this. And actually, let me start from the beginning. Many people get into these cryptos and are excited about the APY, and they're looking for the APY, and they'll do it on Uphold sometimes, and you're like, hey, there's a native staking pool, so let's go over to cspr.live, or let's go over to the API3 DAO, or let's use the Hashpack wallet. And so when it relates to these cryptos, you want to be taking advantage of that. But some people, I've noticed actually, Matt, just kind of disregard the staking. And it's actually a holistic approach. When you step in to buying these altcoins, these proof of stake coins, you have to be you have to be delegating them in the native pools to be securing the network. If you want the long-term success of the network, people have to delegate their cryptos. There has to be validators validating the network. So you are participating in the network if you're holding a token like Casper. And also, too, of that, Casper and other cryptos like Ethereum have inflation rates, all right? So if you're not earning the APY that's at 60% right now for Casper, and there's an 8% inflation rate on Casper year over year, it's like you are just shooting yourself in the foot and you're missing out on what should be the holistic approach when you're entering this crypto. It is mandatory, in my opinion. So you have to be in Casper.live and you have to stake your Casper, in my opinion. But Maddie, there's other cryptos out there. And could you briefly break down to people staking and how we utilize it at CryptoCharged?
Yeah. So first of all, when we're talking about staking, again, make sure we're working with proof of stake models, right? And we're not just if we are acknowledging that we want to get into other stuff, that if we are getting in DeFi protocols, understand that yield farming is very different than staking, that it's not always a one for one situation, right? And some protocols, depending on what kind of DeFi protocol it is, can lead to impermanent loss. So we always want to make sure when we're staking that we understand what the actual staking protocol is, what the rewards are, looking at commission rates, and looking at kind of some of the consensus mechanisms of what does happen to some validators if they are found to be bad actors, right? These are all things we need to ask. We always want to be looking through like the official website and white paper to make sure that we're like in the right spot, looking at the correct resources to get to the staking pools and not just clicking on random stuff in Reddit or on Twitter, right? That's a great way to connect your wallet to some nasty shit and just getting your stuff drained very quickly. So like never rush into anything, I guess, is always going to be the bottom line here. But we always want to use the native staking pool if possible. What you're going to notice is if you sometimes go through, and sometimes you won't find it elsewhere, but like if you go through sometimes Coinbase, or sometimes if you go through somebody inside of just Ledger Live directly, but there's an option to go and connect to another pool, you might actually be giving up a little bit of your reward for the convenience factor of, you know, being inside a certain exchange or a certain platform. And that's not a bad thing. I think that some people are like, I don't care about the extra 2%. Like I can live without it. But a lot of you guys are savvy, and you know, if you're already going to be putting in some work to stake it up, might as well go all the way and get it done. So for Casper, right, it's going to be cspr.live. A lot of them have become very, very easy. Staking didn't used to be this easy. Didn't used to be as user friendly. It still has a lot of room for growth, I think, when it comes to user interface and usability, but I think it's gotten a lot better. Most of the time when you actually land somewhere where you're supposed to land, you'll see a connect wallet button in the corner and you'll see options. So obviously for me, my goal is to always utilize a hardware wallet to secure those if it's an option. Sometimes it's not an option off the bat, but you can, you know, at least use some other third-party wallet. Again, just try to like not create a whole bunch of like unnecessary seed phrases for myself and have to manage a whole bunch of wallets. The more things I can, you know, manage using my ledger is going to just create less of a headache for me down the road. But you know, Casper, when you see cspr.live, you can use your ledger, you can use, you know, the Casper wallet, you can use MetaMask. For API 3, that is going to be an Ethereum-based token. So if you guys are interested in that, you can either go to the API 3 DAO. It again gives you connect wallet option. You guys can use Ledger, you can use Trezor, you can use MetaMask, you know, but you do have to use a little bit of ETH to pay for those transactions. So again, just make sure that you understand some transactions you can also pay like in like kind, and some you can't. So for example, with Casper, when I send Casper, I just pay in Casper because that's what I'm sending. When I send API 3 and I'm staking in a native pool, because it's an Ethereum-based token, they won't let me pay that transaction fee in API 3. So I'll have to make sure I accompany my wallet with a little bit of ETH. So always make sure you guys are aware of those things. It always sucks when you guys don't read all the way into it, and then you don't realize you need ETH to get it out, and then you got to go buy ETH on the centralized exchange and send it over to the other wallet and then send it back in so you can unstake it. It's just not a process you want to deal with. So always understand there's gas fees, and leave a little bit in your wallet to pay for those gas fees so that when you have to do that unstaking process, you're able to do so. HBAR through Hashpack wallet is very, very simple as well. Again, you got the little extension in your corner. So again, tiny little nuance differences, but an extension in your corner. Hardware wallet option if you guys have that, and go for that. Last one that I haven't staked up yet, but staking rewards are relatively new, is going to be for Algorand. As far as what I've seen for, and again, some of it's liquid staking, which is just as good, but we're not going to get into all the nuances of liquid staking, is that you're not going to be able to use a hardware wallet for most of the solutions I've seen right now. Now you can use Para Wallet, which is like one of the big native wallets for Algorand. And I think I saw one of the options offering an Exodus option, which is definitely a step above just like a Para Wallet in my opinion, because you do get some seed phrases, you know, with the Exodus. So that's probably the route that I would go, because you get to, you know, just have a little bit more security. But for the time being, I haven't just picked one because I just want to do a little bit more research. But like I said, guys, never a rush. Just like I'm not rushing at Algorand, even though there's a little over 6% on the table right now, because I want to make sure that I'm making the right decision. And especially when you have multiple options to pick from, go through them. You should never feel like, oh, I've spent too much time on this. Better safe than sorry. Better to look at a few insurance policies, look at few different things, and be like, all right, I made the best educated decision I can to reduce risk.
I love that, Maddie. Great explanation there, team. And so, some big ones for that we care about right now: Casper, POS blockchain. You're able to stake up your Casper to delegate your Casper for 16.19%. And then you have Hedera, Hashgraph, distributed ledger based. You have a above a 6.5% right now if you stake up your Hedera, and then for API 3, Matt, I think it's even above 20% right now APY, and that is an Oracle solution. So, team, a lot of good options right there. But some of those cryptos, maybe like Hedera, we have been very critical of buying right now, not based on the fundamentals, but on the technicals. It may be too expensive. So, Matt, I want to pin up for you right now, just kind of closing out here because we are running out of time. Wow, I can't believe the show is almost over. But I wanted to ask you, Matt, what cryptos are on the table right now in amazing value zones that you can stake up?
Yeah, like you said, HBAR is definitely not as an advantageous of a spot, and in fact, even with today's sell-off, it really just hasn't given a lot of opportunity. I would say that probably APA3 and Casper are your closest values right now, as far as especially the smaller capitalization coins. And again, that's going to be another thing to consider: more volatility with the smaller caps, and then Algo being probably one of the bigger caps out of those three would be a good option as well. I think there's probably still better risk reward on API3 and Casper right now, and those rewards are paid out on different schedules. So make sure you do those comparisons as well, right? API3, you're not getting those rewards for a year. Casper, you're getting them every 2 hours. It's going to be something you want to consider as well. Just do I want to count these rewards towards the cycle and that's part of my decision, or I just want to earn rewards and I'm okay with selling those in another cycle? It's going to kind of you're going to have to make a decision based on that as well. But on our website, guys, we have all those risk reward ratios for you guys for all three. You don't have to do the heavy lifting on them. You can see our ideal zones, you can see our ideal targets, and then you can also look at the staking rewards on top of that, and then kind of put two and two together and make some decisions that are good for you and your risk tolerance.
All right, team, that's it. That's two ways to win with lending and staking that are available to you right now. Lending being rolled out to more and more people on Coinbase with their partnership with Morpho. We're able to borrow against your Bitcoin. And then, of course, you have the staking solutions. I did want to compact that into one total video here today. And honestly, I'm thinking a little bit right now, maybe that was a little bit surface level for you guys. So I highly recommend, just like Matt said, go onto our website. There's a lot of breakdowns. We got people in there that are giving breakdowns, our moderators. Maddie's all the way in there giving breakdowns on how to stake up your Casper or how to stake up your API 3. And there's plenty of people in there to help you if you need that assistance. And we will continuously, hopefully, when more people have access to the feature on Coinbase to be able to borrow against your Bitcoin, we could talk about it more in depth and maybe some strategy with that, team. So if you got some valuable here, make sure you leave a like. Oh, and also too, we talked about cryptos that are on the table for you to buy right now that you could stake up. So, team, a really action-packed show today. We're at 22 minutes here. And I know I'm a little sick right now. We're just getting through it. Maddie was a little sick this weekend. I was in bed all day Saturday, but we showed up here on Monday to give you guys some real value. So make sure you leave a like. Team, we will be back this Wednesday for the Ask Maddie show at 2:30 p.m. Pacific. So if you have a question, make sure you leave it in the comment section down below, and we will see you guys then. Bye.